Welcome to Uncaged. Today we're speaking with John Paradisi. John, it's great to have you on the show.
Hey, good afternoon.
I'm excited to talk with you. I mean, the space that you guys are working in is certainly one of the ones that has received a lot of attention over the last couple of years. John is the CEO of Libertas Funding, which is a direct lender providing working capital and growth financing to established small and mid-sized businesses. John, great to have you on the show. We're going to go through kind of the Libertas story in a little bit. But before we go into the details about that, let's talk a little bit about John. Tell us a little bit about yourself and your career.
Well, I started my career in the late 90s, at Cushman & Wakefield, commercial real estate, first job out of school. And it was one of those positions that was fairly hands-on, and I liked that. I was recruited also by the investment banks, but, those would have been very junior roles. And here, I just felt like I could get my hands dirty, work with brokers, and really start to understand the commercial real estate business and get tangible experience. After a couple of years, I moved to Deutsche Bank, had a few different roles, within Deutsche Bank, including in the fixed income part of the business. And after 2.5 years there, which felt like more like 5 years, given the fact that I was working probably 16-hour days, it was a great boot camp, really. I learned a tremendous amount and got me ready from a work ethics perspective and just discipline, training on the credit side, really understanding risk, and then moved on from there to CIT. And that was really after 9/11. I was down there by the towers at that time. So we were at 130 Liberty, which was right across from the World Trade Center. And so I was at my desk actually at 9/11, which obviously a rough day. I never ended up going back into that building. The building became obsolete, moved into 60 Wall for a short period of time. And then things were so rough in that area and that I decided to make the jump and go back to New Jersey, where I was living at the time, and joined CIT, who was a bit of a client of ours then on the mortgage side. And so joined their consumer capital markets team, went there as an assistant vice president. Within 3 years, I was running the team and kind of grew the balance sheet, grew the business over the following 5 years. Got to a point where we had a $10 billion residential portfolio, a $10 billion. When I joined, it was $2 billion, to give you a sense. And then 5 years later, we were at 10. Then we also had our student lending business. We had a bank. CIT at the time was not a bank. We were a specialty lender, but we had an ILC in Utah. And then the recession came. We sold out of those assets. And then for a period of 7 years, I moved into corporate development, strategy, M&A, working with the new team that had come in that was led by John Dane. He ran the bank at that time. And, that was a great time, 7 years of really just trying to help the bank restructure itself, get out of assets overseas, bring everything back into the platform domestically. We ended up buying One West Bank, got rid of some other things. Anyway, it was a great experience there for 7 more years. And then the last 3-4 years there, I was on the what we call business capital. And so I was leading growth there and strategy for that division and really helping it grow on equipment, our SBA, equipment businesses, small ticket, large ticket, factoring. That was all part of the portfolio. And then during COVID, I spent 17 years at the bank. So I was lucky enough to really be working with a lot of talented people at the time, really a great organization culturally for many of those years. And then COVID kind of came and kind of disrupted a lot of different things. And there was an opportunity for me to go down to Miami and join City National Bank. They were looking for someone that can help them, outline the next phase of the institution. So when I joined in late 2020, the bank was, maybe about $17 billion bank. Today it's running at about $28 billion. So we had a tremendous amount of growth. Good strategies that we laid out. Also took advantage, obviously, of the migration of people coming
Yeah.
down from New York, from California, Chicago. We took great advantage of that. And so the bank was well positioned, had great leadership there with, the CEO that was in place. And we added on talent. We brought in talent. We leveraged the talent that was there, that had done a phenomenal job of growing that platform already up to that point. And so we turbocharged it and really took advantage of that. And the bank has been in a great position since then for continued growth. And then about a year and a half ago, I was things were going quite well at the bank, but Libertas, reached out, looking for their next president and chief operating officer at the time, with an opportunity then to move into the CEO role. And so I thought it was a next step, great step in my career. I
Yeah.
had been now in banks for 15 years,
Yeah.
and there's something appealing about going to a non-bank after being in a bank for 15 years in different regulatory environments.
Yeah.
And so that was an opportunity that I thought made a lot of sense. It brought me back into my backyard, right, where I kind of spent the prior 30 years really building, the foundation to my career.
Well,
And
let's go deeper into the Libertas story. I mean, I have, Libertas has been around now. Wow, time flies. Over a decade now.
about 10 years.
They, have over about 5 billion in funding. I imagine it's probably even a higher number now. But tell me a little bit about the Libertas story.
Yeah, so we probably closer to 5.5 billion at this point. We'll reach 6 billion this summer. The Libertas was set up by our founder Gary Ketcher about 10 years ago, ex Merrill Lynch, employee who ran the derivatives high yield desk there in the 90s. Spun out of that, did a couple other things, started a couple other businesses, sold those businesses. And then someone told him about this business, right, of providing capital to small and medium-sized enterprises. And he looked into that a little bit deeper, was going to invest in a few that he thought could really maybe turbocharge his interest in the initiative. But he couldn't find anything that he thought was kind of doing it the way that he thought it should be done. And so he started his own. He was employee obviously zero, and he hired a tech guy as his first move, and then started building from there. And then the organization over that period of time has grown exponentially, clearly. And last year we were closer to $1.5 billion in originations, and it's a great testament to the work that the people did here. Prior to me even arriving for 9 years, really building out a great institution.
Yeah, and I really see Libertas part of this whole wave. I mean, that has kind of filled this gap in the marketplace for providing working capital for, sometimes like emerging businesses, sometimes, kind of just cash flow stretched businesses, I suppose, right? But tell me a little bit about what you guys focus on specifically.
Yeah, sure. I mean, I think this business has a lot of players, what I would call in the smaller size transactions. We offer some of this when I was at CIT as well in the past, but in smaller deals, you're talking the average transaction in the space here is closer to $70,000-$80,000, maybe even a little less. So the deals are quite small. Our average transaction is about 750,000. So we're basically offering capital about 10 times or 12 times the average that you see out there. We can write checks up to $20 million. I would say 90% of the participants in this kind of what I call mezz bridge financing space is really comfortable providing lending, typically up to $500,000, and then you have some players up to $1 million. The guys who go into the seven figures, it's a very small amount of players in that. And I think we have been able to create something that is unique and what attracted me really to come here, which is the ability to do something that I couldn't quite get right within the banks, right? As senior as I was in the organizations that I was in, and the amount of red tape that I always tried to remove, I couldn't quite ever get to the point where I could put capital in the hands of people in a matter of days.
I'll tell you, my joke on that, John, was when I needed help from my bank, they kept on turning me down. But when we didn't need any help anymore,
Right.
suddenly I started getting a lot of calls from them. And I was like,
Something.
man, you guys could have made my lives a lot easier.
I think that's the story of a lot of, the frustration that you see with the banks. I mean, look, we have in the banks, we have a process, we have to follow it. We have
Hmm.
procedures, we know we're regulated. As a result of that, the banks get cheap capital, right? So you get
Hmm.
access to capital, but there's a cost to that. And the cost is, you need to follow very strict rules and processes that our regulators at the banks expect you to follow. And so there's an exchange for that. So while the banks, I think, would all love to be able to distribute funds faster, they just can't.
Yeah.
And so you can shave off a few days here and there, but the reality is, no matter how tight we and how fast we can get, when you're talking about something that's more than a couple $100,000, when you're talking about millions of dollars, it is very difficult in a bank to deploy that in 2, 3 business days. And that's what
Hmm.
we do here, right? So if the client is able to provide us with the information that we need, and we're talking bank statements, some financials, things that you would have on hand typically, right? Your accounts receivable reports, your accounts payables, things of that nature. If you can get us that information, we can turn things around very quickly. We can get you funded in a multi-million dollar transaction in a matter of a few days.
Hmm.
And in a bank, my experience will tell me that takes somewhere between 45 and 90 days, depending on the complexity of the deal, depending on the back and forth, where the bank may sit along with its own activity and volume. So much more difficult process to get there. And sometimes, even though the underwriters may like the deal, when you get to the very end, you could get turned down, like you experienced that, man. So
Yeah.
I think there's an unknown there. And the bigger the bank, I think the less visibility you get because it's more of a machine. And
Yeah.
so, in the smaller banks, we try to provide better clarity, but even that's difficult because it has a process. And so, what I love about it here is the ability for us to listen to the story of the client and be able
Hmm.
to find a solution that helps them get to the next step. And one of the things that I try to deploy here is the ability to be a little bit more advisory to these clients
Hmm.
and be able to listen to the story. And I find myself, man, a lot of times actually telling the client that they need less money. I
Yeah.
think, I listen to the story and I look at the use of proceeds that they're telling us. And when I look at their cash flow and I look at where they're headed and what they're trying to accomplish, in many cases, we look at that and say, you don't need 3 million, you need 1
Hmm.
million right now. So why don't we deploy that and then see what happens in the next 90 to 120 days? And then we could always deploy the next. It saves them an interest expense, and the ability for them to stack up debt that sometimes these small and medium sized enterprises, we're talking companies anywhere between 10 and a couple of 100 million in revenue. And
Yeah.
the big ones don't always have a great pulse on spend. And
Yeah.
so it helps me, and it's counterintuitive, right? Because people think, well, you're in a lending space, so why don't you put that money to work?
Yeah.
I would argue that I'm in the risk management space. Okay,
Yeah,
I'm
I would too. I really feel that like this whole space has expanded because of how people evaluate risk, right? And essentially, I think the banks don't want to pick up the risk, so this space has kind of been opened up. There's smart companies like Libertas that evaluate risk in a different way, right? And
100%.
essentially you guys are able to move it forward. But I wanted to kind of follow on because I feel like the space that Libertas plays in is an area where a couple years ago it kind of was expanding dramatically, but we live in a world which is so rapidly changing. What are the kind of conversations that you guys are having now with customers? Like what are the like the is it the same old stuff, or are you finding that the discussions are shifting?
Well, I think our customers, like probably many others, have been trying to figure out things around, the overall market, right?
Hmm.
We had tariffs last year, which impacted, I think, our originations in the first half of the year. We saw
Hmm.
people that were ready to do M&A deals that were using our money in some cases for acquisition finance. And so they look at it and they say, I see an opportunity. I want to go buy this. And then, the administration had certainly a lot of activity in the first half of the year where they were throwing out a lot of things there on tariffs. And when these businesses rely on goods coming from overseas, that could really impact and change the margins in those businesses.
Yeah.
So I think many of them put things on pause, or
Yeah.
if they had qualified, say, say they needed $5 million, in many cases, that would have changed the complexity, and it would have changed the way their debt looked and their capital structure. So not knowing, what would happen on the tariffs, a lot of them put these deals on pause, and they either took a lot less money or parked the transactions and didn't do it at all. So I think there was a lot of that. We also saw people, which is encouraging in a way. I saw people that would qualify for $2-3 million, let's say, or 5 million, and they would take 1 million. And in some cases, we see the opposite in the past, right? Guys who qualify, maybe for 300,000 are looking for 3 million, and they just don't have the earnings to be able to support it, right?
Yeah.
And so that's a quick default if you do it that way, because all our deals are very heavy on cash flow. So we spend a lot of time analyzing that, and so we spend a lot of time talking about their use of proceeds and what are the funds going for, and the sentiment that they have in the space. Are you growing? Are you hiring? What does that look like? Are you signing new contracts? We're going pretty deep on trying to understand what drives the business and how the historicals, right? The past 12 months, 24 months worth of activity, how is that different than the forecast you gave me? If you've ever seen, the M&A pitches, or you've seen a strategy from many folks, is as soon as you give me the capital, John, we're going to go from 20 million in revenue to 70 million in revenue. I'm like, well, that's amazing that my $3 million is going to turbocharge your revenue 3x, but tell me more, right? So I think we are in the business of trust but verify, right? So we have a lot of smart people here that spent a lot of time with different backgrounds, whether it's on the hedge fund side or the bank side, that can assess different levels of risk and different types of companies, because we are agnostic to the industry. But we have deep expertise in having underwritten thousands and thousands of transactions across different industries, to where we're able to go deeper and analyze if what they're using the funds for at this moment makes sense. And that's how we drive our decisions.
Yeah, I love that. I like the phrase "trust but verify." But let me shift gears a little bit, and it's fascinating because you have quite a remarkable career in the broader financial services space, and you're focusing here on this stuff. What is it about this type of work that kind of keeps that passion flowing, and where are you finding joy with what you guys are doing?
Listen, I took the job here because I saw the success that this platform had, and it needed to be taken to the next level. I saw the product that was really going through a predominantly, one channel, which is a partner channel. We have some great partners that have kind of helped us grow the business, but the distribution was limited. So the ability for us to build on national partnerships, the ability for us to do some more grassroots build out that we're doing right now in the Southeast, and we just kicked off in the last couple of weeks, kicked off national partnerships last year, and we've had great success there. I think being able to take our product and distribute it more broadly has been a high focus. Working with our partners that we've had, for the last 5 to 10 years, is also been something of importance, and how to work with them on marketing opportunities, how to work with them on product delivery has been something that's been on the forefront for me on driving that. I have a passion for putting capital in the hands of these small and medium-sized enterprises. Many of them, probably didn't even know we existed, frankly. Our marketing was just not there. I hired a CMO in October of last year to really put the brand out there more, to really get people to understand that we are one of the largest players in the space, if not the largest, when it comes to what we do and what we deliver, right? We don't do a lot of units, compared to some of the smaller players who are just a machine, right? They're doing $50,000 units all day, right? And that's, that's a machine in underwriting. We touch every single file that we fund. There is no scorecard, automated underwriting. We leverage technology to help us get to a decision, but the decisions are all made by a human being. And and that's what kind of keeps our losses low and industry leading, and it allows us to get great execution in the capital market side of things, whether it's warehouse financing, whether it's our securitizations in the market. There's great appetite for our paper. In our last securitization, we were 7 times oversubscribed in each tranche. And so there was a tremendous amount of appetite for this paper in this market. And I think when I see that, that demand, and I see the lack of capital that is getting to these businesses that cannot be supported by the banks.
Yeah.
That was a natural gap. And
Yeah.
I played a little bit in that at the banks, both at CIT and at City National when I was supporting the SBA business. But this goes even further because this capital is easier to get into their hands in the SBA. The SBA can
Yeah.
take, 60, 90 days, on a decent sized file, unless you're doing one or 200,000, that could be 30, 45 days. But our capital, I could put millions of dollars in the hands of folks. And all I have to do is essentially get them to know that we are a very, very solid option for them to be able to execute on their plans of growth. And
Well,
that's
John, I mean, I agree. I think it's a huge benefit for small to medium sized businesses, and certainly the speed to market is key. The speed to capital is key, I'd say. But certainly the space will continue to evolve. I mean, when you look at the near future of your industry, what does the rest of this year look like?
well, look, I think, we're hoping for, around let's call it a 15% growth over last year. So double digit growth. A lot of it
Wow.
obviously at times is, contingent on the macro environment, a lot going on obviously in the news, right? With the Middle East and some of the impacts
Yes.
that it has to global trade. So I think the market has been hanging in there. We had a very solid first quarter. I really like our results in Q1. Our performance has been extremely good. And I've been seeing actually an improvement even over the baseline for the last 6 months now. We've been seeing an improving trend in our performance, although we were already happy with what we had last year. So our volume has been consistent and our performance has been improving. So those are all encouraging things that I see in this SME space. And
Yeah.
trust me, we keep a very close eye on that because we do have the type of client, right, that if something happens to them, the best thing that we can do is get on the phone with them very quickly and try to understand what's going on with their business and how we can be helpful. So
Yeah.
those are things that we're very proactive in. But I will tell you that the trends there have been very encouraging. And unless we have something that gets away from some of the more recent news here of maybe a ceasefire and things of that nature that hopefully gets solidified, if that happens, I think we're poised to have a really solid 2026. Unemployment is relatively still low. I mean, people forget that unemployment, generally speaking, has always been in the 5.5% range, six
Now,
percent range, right?
I
We've
mean,
got
compared to other countries, like some of the
it's
European
crazy.
countries where you're
Now,
looking at
it's
just,
half or a third.
yeah, exactly. It's
So we
nothing.
have the
Yeah.
benefit of a great economy here. And, the Fed gets a lot of grief from folks, but their ability to have managed inflation between that 2.5 to 3% while still keeping unemployment sub 5% is a Herculean effort. And I think if we can keep things in that zone, the rest of the economy is positioned well to have good GDP growth and continue to give us the opportunities that our clients to help them grow their business. So I think I hear optimism in the clients that I speak to every day, and I'm encouraged by that.
That's excellent. Well, John, if someone wanted to learn more about Libertas Funding, where's the best place to find you?
Well, listen, I think they can go to our website, right? Libertasfunding.com. I think that's one way to quickly get an understanding of what we have. We have ways for them to reach out to us there. I mean, clearly, if anybody had something that they wanted to pressingly talk about around their business and whatnot, they can always reach out to me, obviously directly, even on LinkedIn. But I would say that our website's a great place to start. It provides information there, contact information, lead forms for people to kind of get engaged with them. And that could be whether it's a partner, right? Someone who has clients that need this type of MES, bridge capital to a longer term strategy, who need to fill in stretch pieces behind their ABLs, for example, right? Because these ABLs are getting advanced at 60, 70 cents in a dollar, and there's a gap there. So we can do things like that, acquisition finance, inventory flexibility. We fit incredibly well in that piece of capital, right? We could be permanent for 5, 10% of your capital stack, or we could be coming in for a 3, 6, 9 month period, right? To help you bridge to a longer term solution if that's, where the strategy is set for that business. So someone that it has a dynamic business who's looking to grow their platform and has a need for flexible capital without a lot of the constraints and timelines that the banks have, we're the source for that.
Yeah, I got it. Well, John, it's been amazing to learn more about what you and the team are building at Libertas, and I do think that that's SMB space. And by the way, the SMB space is such a broad space. I feel like there
Huge.
needs to be like 20 different acronyms to fill in what that acronym stands for. I know it's so many companies. Like I met with a company the other day that was they were like an $800 million business, right? And they were telling me that they were SMB, and I was like,
No.
guys.
Ben, I would say a good definition is my friends at MasterCard would have a good definition. They would say that small business is anyone with revenues under 10 million.
Yeah,
And you can, if you want to argue with me that the number is 15, I can see that. Once you start getting to that 20 million plus, you're really starting to talk about more of a real business, right? Somebody who
yeah,
has probably at least 50 plus employees on average,
yeah,
a real dynamic business. And I would cut that off at that level. I would say small business, general rule under 10 to 100, you're really talking commercial. And then over 100 million in revenue, you're speaking more corporate, right? And every bank will give you a slightly different definition of that. The bigger the bank, the higher those bands are. And so I think, it all really depends on who you're speaking to. But I would say for small business, 10, $15 million and under revenue is kind of the right cut when you think about that. And that's probably, man, I would say it's 25 to 30 something million businesses fit within that.
yeah. I would say that's the lifeblood of so many communities. So it's really important to kind of keep those going. Well, John, thank you for being on the Uncaged show today. We've been speaking with John Paradisi. He is the CEO of Libertas Funding. They are a direct lender providing working capital and growth financing to establish small and mid-sized businesses. We've been talking to him about the emergence of the direct lending space, really where we are today, and really what Libertas does in their processes. John, thank you so much again, and we look forward to having you back.
Dan, appreciate it. It's been a pleasure. Thanks again, and see you in Miami.
Cheers.